Okay, good afternoon, everyone. Welcome to the Innovate Finance Capital and Investment webinar for the first half of 2025. My name is Mike Carter. I'm Senior Policy Advisor here at Innovate Finance. And we've got an expert panel for you today to talk about the state of play in capital markets for FinTech, both in the UK and globally. This morning, we published our first half report. You can find that on our website. And we're going to give you a snapshot of those numbers in just a second. But to kick off, I'm going to ask our panelists to introduce themselves so you know who we've got coming on today. We've got a great mix of panelists from private capital, from public capital, and from capital initiatives. And they're going to cover all parts of the market from a FinTech capital perspective. So I'm going to kick off to ask the private capital panelists to introduce themselves. I'm going to ask Kaan, first of all, to introduce himself and his company.
Hi, Mike. Thank you very much. I'm Kaan, partner at Tenity. As Tenity, we invest in Europe and Asia Pacific, fintech, early deals, pre-seed to seed. We generally invest up to 450,000 US. And so far, we invested in 280 companies. And we love anything related fintech.
Lovely. Thanks, Kaan. Adam.
Thanks, Mike. I'm Adam. I'm a partner at Apis. Apis is a $3 billion private equity fund. We're a financial services and tech specialist. We invest in high growth and profitable fintechs. I cover Europe, but we're a global platform extending across the Middle East and out into Southeast Asia.
Thank you, Adam. Rezso.
Hello, everyone. I'm Rezso. I'm from Illuminate. We are a B2B fintech fund investing in what we see as once in a lifetime or once in a generation shifts affecting financial services, including enterprise software, AI, but also payment, private markets, private credit, and everything that comes into partnering or servicing the industry. Seed to Series B fund, New York, London, Singapore-based team.
Great. Thank you very much. Then on the public market side, we have Gautam from Pillai. Gautam.
Okay, thanks, Mike. Hello, everyone. So I'm Gautam Pillai. I head the fintech practice at UK investment bank Pillai. We provide financial and strategic advice to fintechs across the spectrum, from startups to multi-billion listed companies in the UK, and especially related to fundraising across the stages, equity story positioning, etc. We do look forward to the panel discussion. Thank you.
Thanks, Gautam. Neil from the Stock Exchange.
Super. Thanks, Mike. Hi, everyone. So my name is Neil Shah. I look after the technology sector globally at London Stock Exchange. For 300 years, we've been helping companies go public. And with the launch of our new private securities market that we'll get into, we'll be helping a number of private companies access liquidity as well. Great to meet you all. Thanks.
Thank you, Neil. And last but by no means least, Martin from City of London Corporation, who's doing, as we'll hear, a huge amount of work behind the scenes to get more capital flowing into the sector. Martin.
Doing intro for me, Mike. Hi, everyone. I'm Martin Bailey, Head of Strategic Engagement at the corporation, and one of the architects behind the Managed House Compact and the Managed House Accord this year. And then additionally, chair a local government pension scheme, pension fund in South London as well.
Great. Thanks, Martin. So we're going to kick off with a summary of the report this morning. So Joshita from our team here, would you like to introduce yourself, Joshita, and bring up the slides?
Yes, hello everyone. It's nice to see you all. I'm Joshita Ganesan. I work in the membership team at Innovate Finance. I also work very closely with Mike to produce our investment and landscape report every year. Thanks so much for tuning in. So let me share my screen.
Yeah, I can see.
Right. So thank you so much all for tuning in. I'm going to quickly run through the headlines of the report and our key findings. So the key headlines from the FinTech Investment Landscape Report, the first half of 2025, the global FinTech investment reached 24 billion across 2,597 deals, which is a 6% increase compared to the H2 2024. The UK was broadly flat in the previous 6 months, recording a 1.5 billion raise. And the UK now holds the third place in global fintech investment as the UAE now moves into the second place. Historically, UK has always remained second place in the global fintech investment. But of course, UK remains first in Europe, although the gap is narrowing. So quickly on the top 10 global ranking in fintech investment, the United States led the global fintech investment activity with over 11.5 billion raised across 1,082 deals. The UAE moves into the second place for this time being the biggest, largest deal that happened with Binance, a 2 billion raise. The UK now sits in the third place with 1.5 billion flat with over 240 deals. India and Singapore as well have been very close behind the UK for the past few years, and they've also been closer now. On the top 5 global fintech deals, as I mentioned earlier, the largest deal in the half year was a 2 billion capital raise by Binance. It's also worth mentioning that there was some ambiguity around identifying the headquarters for Binance. So we had reached out to them. We were asked to put Binance as headquartered in the UAE. So this is also the largest capital raise since Stripe that happened in 2023, which was worth over 6.8 billion. And also a fun fact on the Binance raise that this raise was paid in stablecoin, befitting a capital raise for a cryptocurrency exchange. So that was quite interesting. Alongside this deal, payment sector has executed some of the largest deals in the market as well. On the European top 10, the UK once again led the region with 1.5 billion, France following with 694 million, and Germany very close behind at 669 million with 58 deals. These three markets remain the backbone of the European fintech investment. Historically, UK raised more capital than the rest of Europe combined. Now the rest of Europe is catching up, and the gap is also narrowing. On the top 5 UK fintech deals, we've seen Rapid at 300 million, also making it to the top 5 global deals. As you can see, there is less concentration on the payments vertical compared to the top 5 global deals. We're also very pleased to see one of our members, Quantexa, who have raised over 175 million in the top 5 UK fintech deals as well. We're always happy to see our members raise capital, and our members continue to be active in that. So we've this year seen 16 of our members raise capital. So we hope to see more of them in the second half of the year. Thank you so much for listening. So if you're interested to read more, you can scan the QR code and read our report. Thank you.
Great. Joshita, thanks very much indeed. So that's the summary. You can find our report on our website, as Joshita says. Now let's get into the discussion and find out what has been happening in the markets. We're going to start off with venture capital, the private capital markets, with our 3 experts on the panel. So let's kick off with the question to Kaan, to Adam, and to Rezso. What's your view on the investment levels in the first half in the UK and globally, and where have you seen more activity? Let's kick off with Adam first of all.
Yeah, I think we're through the kind of correction phase, right? We're seeing valuations settling. We're seeing investor expectations maybe a bit more grounded, and the deployment environment is now more driven by those fundamentals. I think from our perspective, this last 6 months has probably been the most active period for APIS. So over a 12-month period now, we've done 7 transactions, 6 of which we've announced. And 2 of those have been in that kind of European footprint. And one of our more recent deals was in the UK, I think just outside the time period of this report, though, in a company called Moneybox. So I think the conviction investors are still there. I think we're seeing rationality in the market. And I do think we're going to start seeing a pickup as well towards the back end of the year.
Okay, that's very helpful. Kaan, what are you seeing in your part of the market?
Sure. The good thing is we also invest in Europe and Asia Pacific, so it gives us a broader approach, like a larger funnel. Personally, I do see a lot of still UK early stage deals, which I really appreciate. I think the nearly one-fourth of all the deals that we did this year was coming from the UK, the European ones, because basically that still shows a good signal from the market. But also, as Adam mentioned, since we invest in pre-seed to seed deals, the valuations are more sane right now. People are coming with with a larger backbones and a better traction when they're trying to raise capital. And I think like the founders are getting more seasoned, so I really appreciate it. And we do see some of them pick up really, really fast. So I don't think it has a bad signal in the market. Unfortunately, I would love to see more deals happening, but even if you check the UK numbers, so the number of deals are quite a lot compared to the other markets, which is a great thing because you need more companies to do more larger rounds to make UK in the top two or maybe top one position back.
Okay, thank you. And Reza, your business is also very international. What have you been seeing?
Yes, I think to relate back to the number of deals point, I think that speaks to like high number of deals, but the volumes are not necessarily standing out in historical context, speaks to a healthier early stage market, right? Like smaller, earlier deals. And I think that speaks to actually a healthier cohorts of startups coming to exist post 2021, 2022 market correction. There is a new world, a new reality. How much capital can be raised in a pre-revenue business has definitely changed. So in that sense, we are seeing a healthier market, companies that are building in a more capital efficient, focused manner, much more nimble, and to Kaan's point, also perhaps more seasoned. Now the UK and some of Europe definitely being able to field a startup funding team that's on its second or third journey, not on the very first one. So I think that's not necessarily obvious from the headline number, but it's certainly there. The other thing I would say is there is definitely a bifurcated market where AI companies are getting a lot of attention, and somehow those mega rounds even skew the overall numbers up. Not all of those would be fintech, but I would still expect that those large deals will somewhat obfuscate the real activity or how easy it is for early stage businesses to raise capital, which will be hard for those not in a hot sector like that.
Well, that's great. You've taken us on to looking at the different sectors. So, in the last few years, certainly in the UK, a lot of the capital has gone into challenger banks and payments. Now, quite a few of the challenger banks are becoming profitable and don't necessarily need to raise more capital. Payments are still a pretty active sector in terms of technological changes. But you talked there about AI, Rezo. What are you seeing in the UK compared to other countries around AI investment opportunities?
Yeah, it is going to be very anecdotal. I'm sure each of us have our own perspective on this. To me, it feels like the US has completely run circles around Europe. And in the infrastructure side, that's very obvious that most of the leading technology is being built there and the ecosystem is being formed there. And it is somewhat disappointing to see that, to be honest. Like I would have expected that by now we have a deeper technology ecosystem, even if it isn't able to compete outright. I would have expected to put up a bit more of a fight. And within that, I think the UK situation, I see it pretty. I don't know, like sadly, that we don't really have a big infrastructure business out of the UK like France has Mistral, at least on the LLM side. I think secondly, there is also an engineering ecosystem that comes with that, and we are seeing a very collaborative environment in Paris right now where startups are helping each other. Those who have made it contribute back to the ecosystem through angel investment, and also a lot of talent moving back from the United States to France from very significant listed businesses. So I don't really see that in the UK, and now I don't know whether that's an Illuminate lens and we are doing something wrong, or there is something that's getting lost as a bit of lost opportunity.
Okay, that's very interesting. Thank you. So, I mean, there's a reason why France is catching the UK up then from what you're saying. Adam, what are you seeing?
Yeah, I'd probably take a slightly different perspective and a different lens. We're a little bit later stage, growth stage companies. I think we're seeing AI now is becoming live across our portfolio is probably the way we'd look at it. So we think of us as the financial services and tech specialists. That's the sector we know super well, and we're great at applying technology into that subsector. The companies we've typically backed are digital native companies, which at least means they're super well positioned to apply AI, whether it's a personalizing the customer experience, the operating kind of efficiency on the back end, the compliance, right? How can we improve outcomes at scale? So I think there is a lot of adoption of AI, even within that very UK and European kind of centric piece away from it all. But it's hard to get away from the fact that it's certainly not a space the UK has a leadership position in.
Okay, thank you. Kaan, you're investing in early stage companies in many countries. What are you seeing from an AI perspective?
I mean, now nearly all of our like fintechs are positioned with AI. I mean, I'm not just talking about like having LLM wrappers or like maybe chatbots, but it is changing. Like compared to UK, I think UK has been quite cosmopolitan throughout the history of time. So that's why a lot of like commercial ideas can grow significantly. I mean, going back to Rezso's point, because I wish that we had more infrastructure level things, because this is like the compared to US and the rest of the world. Still, if you are building something on top of AI, potentially you are paying a lot of money to American companies anyway. So they are growing with you. Hopefully, you can grow a little bit faster. I think segmentation or segregation of different markets, like when we think about Asia, I mean, from a Western point of view, you say like Asian countries, but those countries are like all of them like 50 million people, different type of landscapes, different currencies, different cultures. So there are so many different companies that we tend to invest in similar business models, including AI. I think now the 5 to 7 years, there will be a lot of like Series A to B companies, then we will see consolidation, which is going to be interesting. But AI is all about the data quality. And yes, we had a lot of data from Western world. I think over there it will be a different ball game, because you want to have those kind of data that you wouldn't find it like a culturally appropriate way. So it is going to be an interesting thing for sure coming up.
Okay, thank you. Now, another sector that Innovate Finance we're very positive about is stablecoins. We think it's going to be a big part of the payment sector in the coming years globally. We're not seeing the regulatory support for that in the UK at the moment. I'm interested to hear the panelists' views on A, stablecoins as a technology, and B, the investment opportunities and your views on where that is going to arise. And let me kick off with Adam.
Yeah, I mean, it's definitely a big thematic for us. So we invest a significant amount into the payment sector. Actually, one of our more recent deals is a company called Tunes, which I saw is one of your membership pays. A big rationale for that investment was the use of stablecoins to accelerate the cross-border flow of payments. So conceptually, super exciting space, one we think has quite a lot of runway and duration in it, and one we're actively deploying about. I think when you put a UK lens over it, it's a little bit disappointing, right? So if you look back 5 years, 6 years, 7 years in this space, the UK had a first mover advantage on stable coins and cryptocurrencies that they seem to have lost. I think where are we now? We are no longer in a leadership position. I think we're behind multiple other markets, most notably the US, but I'd also say Singapore and the UAE, who would have been behind us, are now making strides in this space. I just can't get away from the lost opportunity, really, for the UK in a space where, I actually love the LSE's intro that they've got 300 years of history in the space. We've got a similar time period of being a centre of Forex flows in the UK market, and stable coins would feel to be a natural evolution of that.
Okay, Rezso, what's your take on stablecoins?
I think Adam has really said it much better than I could. There was a moment in time for maybe 3-4 years, previous US administration, where the SEC was very much antagonizing digital assets, and the UK had a chance to create some national champions and bring the talent here and also keep it here. There's a lot of homebrew talent in this industry, and there's a lot of financial services experience in this, clearing cross-border payment flows, enough to look at kind of the classic heydays of like 2010's currency cloud and all that enabled Wise, TransferWise, Revolut, and others, right? Like it, looking back on that, it's almost hard to explain why we don't have more big unicorns in the infrastructure layer. Again, we have it on the application side, but not on the infrastructure, and there should have been more created. I think this is again happening in digital assets, where it's clearly the future rails of financial services. The UK has a key advantage here, and I think that's where the American banks seem to be very entrepreneurial in exploring this. The American regulators seem to be very entrepreneurial, like that wasn't the case, but now they are. And by regulating, I think we'll see that stable coins, central bank digital currency yield, like very important parts of this infrastructure is going there, but also trading infrastructure, risk management, things that will haunt us for next 2-3 decades, like because those are being built now and they will be used by the institutions everywhere, and we'll just be paying, again, American companies to provide key financial markets infrastructure for the rest of the world. So I still think there is a chance now to change that, and there would be time to frankly regulate and put down rules around, for example, staking, and help build that infrastructure in Europe. I just have a bad feeling that we're going to play catch up again.
Yeah, Rezso, there's time, but it's like next 12-18 months, right? They need to be moving. That's the speed you need in this space.
It's all to play for, is what you're saying. But
Perplexity AI agrees with Rezso's hope there.
I want to bring in Gautam, if I may. Gautam, you spend a lot of time talking to private companies as well in your job. I'm interested to hear what sectors you're seeing are most active. Who are the companies you're seeing? Are you seeing a lot in stablecoins, and what kind of use of AI are you seeing?
Yeah, I think you did touch upon the biggest sector earlier, being neobanks, and I think neobanks in UK kind of kicked off in the last 10 plus years. I mean, 2014-15. So in the last decade, a cohort of these companies have delivered an incredible profit, and are kind of, if I may say so, IPO ready. At least a handful of them are, and probably waiting for the right opportunity to come to the market. And they have reached a stage where, given the profitability levels on which they are, there is no need to raise anymore. A lot of the deals we are seeing in that space is all secondaries of founders or employees kind of monetizing their stakes. So neobanks definitely a big space, and in the UK market. And when I speak to these founders and CEOs of these companies, there are no comps as of now. In the US, there are companies like Nubank and a few others. So I think there is an element of potential education required in the market of how to value a growth bank or a growing asset book. And that's probably what is kind of making them hesitate to come to the market. That's on the neobank side. The other payments still remains a big sector, and but payments have moved on from the classical B2B2C payment transaction world into more B2B kind of payments, and specifically related to cross-border payments. And there are a bunch of cross-border payment companies, both in the public market and the private market, both on B2C and B2B, but we are seeing a lot more activity in B2B, and that is where the stablecoin conversation is becoming more and more relevant. And if you think about where cross-border payments have come up, cross-border payments is kind of disrupting the classical correspondent banking network, which is opaque and more expensive and takes a long time for money to move across borders. And some of these companies have created networks which kind of cut down on that time, and a stablecoin network can basically make it real time. So there is a lot of use cases in that space. The other kind of subsector where I see a lot of activity is financial software, and specifically related to banking software or core banking software, extremely mission critical applications in which these vendors provide. Obviously, there is a kind of a slow moving. You're selling to a slow-moving legacy bank, so the deals are the deals in the companies which kind of when they sell the product, they are time-consuming. There is a delay in that. So these are the key kind of subsectors, I would say, which we spend time on. But if I look at generally across a market, and again from a and we were discussing earlier, we are seeing a lot of M&A in the UK listed space, with both tech and fintech companies, growth companies, if you like, are going away from the market, and we need a refill of that funnel. And then when I look at and then maybe Adam may be able to add more color on this, but there are a lot of aging assets inside private equity, which probably need an exit, and a natural exit for some of those for assets is the public market. And one classical example I would say is a Nordic company called Visma, which has announced that they are going to list in London, and Visma has been an asset which has been inside multiple private equities for a long time. So I think there are some green shoots in the horizon in the market. A lot of subsectors. I only picked up 2 or 3, but there are probably 10 or 15 in the space.
Okay, thank you. Look, we'll come on to public markets a bit more in a minute, but before that, I want to turn to Martin now, because there's been a lot of talk in the last few years about the lack of capital flowing into private markets in particular, and how can fintechs get access to more capital. Martin has been very closely involved in the Mansion House Compact, the Mansion House Accord, and other initiatives that are going on. Martin, can you tell us about the Mansion House Accord, which was announced quite recently? The Mansion House Compact was a couple of years ago. The Mansion House Accord is the next phase, but what does it actually mean? What is it designed to do?
No, of course. Thank you. Hi, everyone. So yes, the compact is a kind of refresher for all. We launched that 2 years ago, and that had 11 signatories who the pre-seed was, how do we get UK pension fund money to be investing in the same levels in UK tech that we saw overseas pension money and institutional money investing as well? And why weren't they at the table? What was it? Regulatory barriers? Was it cultural barriers? And what was happening there? So that's why the compact came around, and that was an voluntary ambition for 5% of the DC default funds into honest equities, VC and growth equity by 2030, which on the prediction of what DC pension funds will have as funds under management by 2030 unlocks about 50 billion. But there was no geographical restrictions on that, but it was very focused around that honest equity and VC, growth equity, and AIM and ACRIS as well. The accord that we built on this year was and isn't very much intended to be a build on the compact. So there are 17 signatories to that. Not every compact signatory is an accord signatory. Not every accord signatory is a compact signatory. But the accord covers almost 90% of that DC market now. But the ambition has gone wider, looking at 10% of all private markets. But additionally and helpfully within that, at least half of that to be into the UK. So especially where 10 of those signatories are compact in the accord, and there's a very good crossover of actually where there's a real focus now for them to it benefits them to actually look at investing in the UK into UK tech and UK fintechs, because in one element it allows them to achieve the ambitions of both the compact and the equal. But we're starting from a point, and others have said up to 10%. There's some signatories who have made numbers bigger than that, and that is correct. But actually, as an aggregate of where those pension funds are, it's 3% as at the start of the year. So getting the entire sector to 10% would be an incredible and significant lift, and in terms of unlocking billions, particularly that dedicated ring fence for UK investment as well. So that's what the intention is of moving that forward to.
Okay, thank you. So for the DC money to actually get into a fintech, there needs to be a fund or a structure that works for them. So can you tell us about the sort of who's doing what in this area?
Yeah, no, absolutely, and that's where that's where it's well, piecemeal is the wrong word, but it's where there's an acknowledgement that all those 17 signatories, they all are coming from very different start points, and so are on very different points of their journeys. And so you've got some signatories who have already announced structures and have made big public, made big public investments, such as, so look at Phoenix and their joint vehicle with Schroders for Future Growth Capital, and you would have seen earlier this year investments made into Synthesia, AI, and others in the year, in terms of actually where they're really targeting down. That was legal tech. Others who will be looking to the British Business Bank and the British Growth Partnership, and as that moves forward through its regulatory approval process, Aegon and Cushion have made, and People's Pension have made. They will do a lot of their investments through British Growth Partnership and with the support of British Business Bank, and then others will be kind of going alone, and we know others are with the FCA at the moment in terms of getting their own LTAFs approved, and therefore being able to launch products as well. So what our focus is on now is very much, the policy argument has been one that there's the zeitgeist of the Accord launch was well coordinated with what government was doing in terms of the wider pension schemes bill, the wider, you may have seen them speak in terms of the wider pensions commission, in terms of actually looking at those what are we investing, and actually those long-term outcomes isn't just about what being invested in, but also what people are retiring into in terms of living standards as well. And so actually that investing in UK tech is also the benefit back of actually what Innovate Finance members add to the UK as a whole, in terms of a place to live, work, and play in that sense too. So our focus is very much on ensuring that how we can accelerate that deployment across those 17, and knowing where each is starting from the journey and what interventions they need, because some of them will perhaps still need some regulatory blockers, or otherwise based on their size, but others it's just about laying the case, and also their own internal understandings of what is the best vehicle for them as well. I think there are some who have made that intent, and need to still make the argument internally in terms of getting those, because of their structures and because they're complicated, and there are some who are very much leading the way and being catalysts, and have an expertise, have in-house investment teams such as at USS, and so are ready and able to be doing that. Have an experience of investing in private markets, and are ready and able to do that as well.
So do you think if we're on this call in 12 months' time, you'll be able to point to some examples of where funds have started flowing? Yeah,
absolutely. I hope so. And part of the connection with the pension schemes bill and other bits of the regulatory world is that the couching of long-term, what are the long-term outcomes, and also looking at what value for money really means, and what government and regulators are committed to is value for money framework and a value for money trial, in terms of actually publishing data of where those UK pension funds are going to be invested in. And that will be really helpful, both for you as scaling businesses and growing businesses and needing that investment, in terms of actually are they investing in my business, but also for you possibly, and the people you employ probably also have pension. If you're using some of these master trusts for the pensions, actually what are they investing in? Actually what are those DC pots looking like? And they'll be for the first time, and that will take a couple of iterations of actually being able to have that comparable data across those UK pension funds as well.
And there's been talk about whether there should be some sort of compulsion for the DC funds to invest a certain amount. At the moment, it's voluntary. Do you feel that we'll get there with voluntary?
Yeah, I think you will. I think I think the Accord showed probably the best sign of kind of voluntary industrial reform for a generation in terms of getting so many together and also showing that not every pension fund has signed up, and nor have they been forced to by government, nor have they been blacklisted by government or industry, and actually there's an ability for them to kind of go their own way, and equally I think that voluntary ability does allow those reforms to take shape that work best to the UK in that sense. And government has been very clear; it has no intention of mandating. It wants to give funds the space to show progress, but funds really do need to show progress as well. But we also have to remember they've got a lot of pressure on them, other requirements that come out of the pension schemes, but in terms of achieving that scale, which government's also been quite clear on. But government really does. It has no intention of trying to bulldoze and force that mandation for fear of creating asset bubbles and others. This is around actually letting industry crack on, and I do think the intent is there, and that's why we're really focused on making sure that they have every locker move out the way to go at speed.
Okay, thank you. So two other initiatives I want to talk about in the private capital space. So one last week, Martin, there was announcement that from Treasury that City of London and British Business Bank are going to cooperate in bringing together fintechs and capital, which is something Innovate Finance is going to help with. Can you? I know it's very early days in terms of this announcement. Can you just give us the quick summary of what you're expecting?
No, it is. Thank you. And that the roadmap for what that will look like is evolving pretty rapidly. Yeah, what we're conscious of it's how we connect that capital, because there's been a lot of discussion recently. The release of the industrial strategy and the release of various underlying sector plans across those industrial strategy growth driving sectors, as well as other sectors and calls on that aren't in the industrial strategy as well. And actually, so how do we both ensure that both the UK pension funds and called signatories and British Business Bank and other bits of the public financing landscape, but also other bits of the private financing landscape, such as, say, the attraction of international capital, global family offices. How are we actually coordinating all those together in terms of being really clear that the funnel of capital and there's not going to be a duplication of both effort and also just in terms of finding those right sources of money, but also finding those sources of money, finding those right end destinations for them, whether that is direct investing, co-investing, fund of funds, or other methods as well. And so as I say, it's still quite nascent in terms of how that roadmap's developing, but there's been a BBB did a roundtable and things that started this month, earlier this month, in terms of trying to scope out some of that work. And I think those outcomes will develop quite quickly as we come out of the summer, and significant process will be seen and made under that as well.
Great. Okay, so watch the space. We'll hear more from you maybe again in 12 months' time. I now want to turn to Neil and to talk about Pisces, which is another initiative this one actually has been running for a couple of years, a Treasury initiative with FCA regulation. It's been talked about a lot, but has always seemed like it's a long way from happening, but I think it's actually now very close. Neil.
It's very real, man. Mike.
Tell us about Pisces.
Right. So Pisces stands for the Private Intermittent Securities and Capital Exchange System Regulation. The R is silent. I didn't come up with it. I think it was something that BIM Afilami may have named along the way. And this is a new regulatory framework that's designed by HMT, implemented by the FCA, that enables private companies to offer periodic trading in their shares without becoming a PLC. Think of it as a private company going public for a day. They might run an auction every half year or once a year, and there's no requirement for continuous disclosure between these trading windows, so that company goes back to being private again. And why is this important? as we know, companies been staying private for longer. The number of 40-year-old chairs I know is you can count them on several hands these days. And there is a bit of fatigue in the industry, right? And Pisces is a pressure release valve that will hopefully allow these companies to offer a little bit of liquidity to founders, to employees, to friends and family that they might borrow 50 grand from an aunt to get funded, angels along the way, and it prevents premature sale or premature IPO, and allows companies that agency to transact when it makes sense for them. So we're hugely excited. The other thing that Pisces has got going for it is that it's compliant with EMI and CSOP schemes, which makes some of these companies that use the venue a lot more attractive as employers. Is also exempt of stamp duty, one of two tax benefits in the last budget. So it's had quite a bit of interest. We had a showcase at the end of June. About 30 or so companies and 60 or so investors attended that, and we're looking forward to hopefully getting our approval before the end of the quarter from the FCA, and seeing first auctions before the end of the year.
Oh, fabulous! So we could see something in the next 6 months.
I hope so.
That would be great. So you've already road tested it with some investors and with some companies.
That's right, including some of your forums, Mike. If you remember the CEO summit, is this a good idea? I think the consensus was generally, yeah. We've spoken about 300 unicorns and decacorns globally, and no one said, Neil, this is a really daft idea. Maybe a few GPs who have a slightly different agenda, but generally the consensus is that this is quite welcome. There's platforms in the States, but they're very much focused on the investors. It's not regulated. This really puts agency back in the hands of companies. So we couldn't be more excited about it, especially with the wall of money that Martin's going to unleash from pension funds. 6 trillion quid of assets and pensions and insurance in the UK. There's no shortage of money. Let's put that to good work and give Gautam some IPOs hopefully to write on in the coming years.
Great. So on this call in 12 months' time, you'll be able to give us good news on what's been happening there. That's what we like to hear. So that's really if you like, the last stop on the line for the private capital, and that then takes us into the public markets. And we've had an increased focus on public markets in our report in the last couple of years. They continue to be subdued, but obviously we have a lot of members, who are looking to public markets as a potential way to raise capital, to let investors release capital. Neil, what's your take on what's happening in the public markets at the moment?
I think Gautam touched on it pretty well earlier, that there's a number of companies which are in a far better position than they were 2 years ago. They're effectively IPO ready, and they're just waiting for slightly more positive sentiment out there. We've seen just this year that there is capital flowing. Yes, there's been some outflows in some of the smaller funds, but Rosebank raised 1.14 billion in a matter of hours in the middle of June for what will be hopefully the largest US company to join our AIM market in Q3. So that just shows what's possible in this market. And Mike, I really think it's about sentiment. If we can see some pensions capital flowing into some of these AIM fund managers, and a little bit more positivity around the market, I think we'll start to see deals. There's been a number rumored to be coming in the press. We've had a number of challenges this year. We've had geopolitical issues and Liberation Day and a spike in the VIX, and markets just hate volatility. But I think as soon as that subsides, we'll start to see more deals. 9 IPOs so far, but a number lined up for the rest of the year. Perhaps a little bit smaller than what people have their eyes on, but the pipeline's looking pretty robust. When I speak to PwC, Deloitte, EY, Citigroup, Cavendish, they're all telling me that the pipeline's not been this busy since 2021, which is really encouraging. I don't think we're going to see a flood. It's going to be a trickle, but there are a number of assets that are backed by sponsors that need liquidity, and that's what we're here to provide.
That is very, very encouraging. Gautam, you're very close to companies who are potentially coming to the market. You touched on this a bit earlier, but tell us more from a Peel Hunt perspective.
Sure. I think let me give a market backdrop. So since 2021, so 4 years to date, every month we have seen outflows from the UK market. I think there was 1 month in the 48 months. There was 1 month there was an inflow into funds, into UK funds. Every other month we have seen outflow in the tune of anywhere between half a billion to a billion. So that's a lot of money which has flown out of the UK. And I think a lot of things which Martin touched upon, which Neil touched upon, are all kind of reforms trying to revitalize that market. But that is the ground reality of the scenario. And what it does is that it's interesting in 2025, year to date, the UK markets, FTSE 100 and FTSE 250, both have outperformed the US corresponding markets. But you wouldn't think so. You wouldn't believe that was the case, especially if you kind of mark to market on dollar terms. Now, that being the reality, and a point which I touched upon earlier, there have been a lot of growth companies which have exited the UK, mainly via M&A by its US counterparts or private equity. So a lot of funds, despite this outflow, are sitting with dry powder, and they're looking for opportunities to invest. So what it means is that if we bring a high quality company to London, there will be a demand for getting in the share register of those companies. I'll give an example. This happened last week, maybe 10 days back. Peel Hunt raised close to 250 million pounds this is not a primary, it's a secondary for Courts PLC, which was probably the biggest secondary equity raise in a long time. And it was a well covered book with significant amount of demand, not just from UK, from Europe and US as well. So the demand for UK equities is there. And what we are seeing, and I agree with Neil, the pipeline is encouraging, and pipeline is encouraging especially because, specifically talking about fintech, we have seen a handful of IPOs in the US, the likes of Circle and Chime and eToro, which have done incredibly well in the aftermarket, and that is always, I would say, a lead indicator of what would happen in the UK market specifically. So I've been in this market for the last 20 years, but the last 15 years, if I look at it, 2010 to 2025, 2010 to 2014, we didn't have a lot of IPOs in the UK or the European market. 2014 to 2021 was a wave in which I personally worked on close to 15 tech and fintech IPOs. So I do believe that there is more demand. There is a pipeline. Companies are talking about it. I myself am having active conversations with people in the market. And I would quote, and I know that Innovate Finance is very close to the Unicorn Council. So I speak to Philip Lamont at Zilch quite regularly, and Philip says that he heads the Unicorn Council. There are 28 fintech unicorns in the UK. I think I forget the exact number, but their combined market value or valuation of those assets are close to 100 billion now. I mean, it might be skewed by a few handful of companies, but still they're all above $1 billion in valuation. If these companies continue their growth rate in, let's say, in the next 3 to 5 years' time and come to the public markets, they could very easily make up 50% of FTSE 100. So there's a lot of high quality supply of companies. I think it's, from my standpoint and being an optimist, it's not a question of if, but when.
And I absolutely agree with that, Gautam. And what I'd also add is, for these must-own assets, let's not forget that London's global, right? That about 62% of the capital in London is from overseas. So this is what's going to hold the market up. If you look at the FTSE 350, there's more American investors than there are British investors, which have had those outflows. But they're recycling capital, looking for fantastic new ideas, and I'm really encouraged by the supply. Unicorn Council is great, but then you look at funds like Local Globe sitting on 11 fintechs doing north of $100 million. Some of these companies are doing less in a quarter than what Chime print, so less in a year than what Chime prints in a quarter, right? And this is, I think, the opportunity for London to not only help British fintechs but potentially global fintechs as well.
Okay, that's really interesting. So you You sound cautiously optimistic, Neil.
You could say that.
Okay. So I think we're going to have to wrap it up. We've overrun a little bit, so I'm afraid we're not going to have time to run through any Q&A. It sounds like there's a number of different competing themes here. We've got sort of the early generation of fintechs that are IPO ready, and we just need the market to be in the right place for that. We've got perhaps the ones a little bit behind them where capital concerns are hopefully being addressed by things like the Mansion House Accord, maybe by Pisces. And then we're also hearing that in terms of the next generation of products, so things like AI and stablecoins, that there are concerns around whether the UK is going to produce the startups and the businesses in those areas compared to some of the other countries. So there's a number of different competing themes that I'm hearing there. We're gonna call it a day there. I'd like to thank all of the panelists very much for coming on. We've had a very good debate, good discussion, very interesting views. Joshita, thank you very much for all the number crunching and analysis that you did. The data has to be really scrubbed to make sure we don't include a lot of spurious crypto deals that never happen. So there's a lot more to producing the data than meets the eye. But thank you to everyone who has been watching today. Thank you to the panelists. We'll have some capital-related events at Innovate Finance in the second half of this year. Things such as investor speed dating, matching fintechs with VCs. We're going to have a partnerships events. We've put the QR code up here. You can find the full report on our website. Otherwise, thank you very much, everyone, for listening.
Thank you very much.
Thanks, Mike. Thanks, everyone. Bye.
Thanks all.